I do this for a living, and in January it'll be the beginning of my 34th year, and right now I'm just going to talk a little bit about myself and my service, and then I've got everything from Apple to Google to NASDAQ to E-mini S&Ps, bonds, notes, dollar index, pound, yen, euro, gold, silver, soybeans, and we may throw a little Yahoo at you. So pull up a seat and grab a cup of coffee. We are going to have a powerful day today. Anyhow, I started in the business in January 1979 on the floor of the Chicago Mercantile Exchange, and by 1982, I was trading in the actually the Eurodollar pit, and shortly after that, I was offered a job to go work on the Life Exchange in London. Life standing for the London International Financial Futures Exchange. I spent a total of 12 years there. Ended up back in Chicago around the turn of the century. And on the day that the planes hit the Twin Towers, I was standing on the floor of the Chicago Mercantile Exchange. And what happened on that day and for the following 3 months was almost identical to what happened during the crash of '87, i.e., the stock market went down and the bond market went up. And for anyone who doesn't, everyone's heard the phrase flight to quality. It was the day after Black Monday, 1987, or that day, October 19th and October 20th, is when the term flight to quality was coined. And we hear about it all the time now. But in that final hour on October 19th, 1987, the stock market went from down 200 to down 500. And you have to remember that whole day, the stock market fell a total of 23.4%. So that last 300 points was probably another, 15, 16%, something like that. So that's a huge move. And what happened, they all sold their stocks. They bought bonds. Something I teach in the TNT class is a crash scenario trade. And it was actually on the Tuesday after Black Monday that I bought S&Ps, and that's been the 25-year low. But and that's just another trade that I have. But moving forward, when the planes hit the Twin Towers, traders are picking my brain, about the market, and they're picking my brain, and I'm giving them market information and giving them market information. And then finally, in 2002, at the beginning of 2002, I said, the heck with this. I'm going to quit giving away my information. I'm going to sell my information. And I had this Fibonacci-based mathematical formula in my back pocket, which puts out support and resistance levels in markets. And I still, to this day, I do my points every day. I see Chet Fisher's in the room. Morgan, do you trade without using the PowerPoints? Chet Fisher, I don't trade until I look at the PowerPoints. And, just recently, when the S&Ps broke down to 383, I had a PowerPoint at 1383. So that's neither here nor there. That's something else I put into my service. My service every day, I send out the PowerPoints, usually sometime between 3:30 and 4 o'clock Central Time. And these are the PowerPoints now for the following day's trade. The following day obviously starts at 5 o'clock in the evening. After that, I send out what I consider to be my system trades. In 2005, I wrote well, I didn't write it, but I had an idea. I left the pits in 2003, and I realized that I needed to come up with a longer-term scenario for trading, and so I put together a group of 4 to 5 different indicators, weighted basically, and they're heavily weighted towards MACD. MACD is divergences. I'm huge into bullish and bearish divergences, but and Fibonacci, of course. But I had a college kid write the program, and basically what it does is it gives me computer-generated buy and sell signals in a market that has a high-low close. And if you see my charts, they have these little diamonds up here. I mean, here's like 4 sell signals at the top of this move. But last Friday, I got a sell signal in gold, and gold closed that day at 1712.70. And I sold the gold because that's what you're supposed to do as a system trader. I sold it at the end of the day, and on Monday I took anywhere from $6 to $10 worth of heat. On Tuesday it was 25 lower, and that was just like, thank you very much. And I commented in the room earlier that, you know, I hope people got on that trade, and there's quite a few of my readers in the room that did get on it. So I mean, a one lot $25 in gold is $2,500. I mean, that's like, okay, you took $600 worth of heat, but you know, my service doesn't even cost that in a year. So I put out, okay, so I put out the PowerPoints first, then I put out my system trades. Either one, probably the system trades come out first, and those are usually out by 4 o'clock Central Time for the following day's trade. Then I write my market commentary and my charts. And every commentary will have an E-mini S&P, an E-mini Dow future, and an E-mini NASDAQ in the commentary. It'll have a treasury bond, a treasury note, and a Eurodollar interest rate related, not the euro currency, but the Eurodollar. I originally had Eurodollar clients, and I still have them, so I still put out a Eurodollar chart. I put out a DAX chart and a Eurostoxx 50 chart. And of late, you'll see my British pound chart today. I've been putting out a British pound chart. I'll put out whatever's the hot commodity at the moment. If there's something I see, if there's something I spot, I put it out there. And what's going on here? Oh, okay. Morgan's obviously playing. Anyhow, so you get all that. I do that 4 days a week, and then on the weekend, I put out my weekend commentary. If you go into the documents section, there's a folder in there, TLP 12. There it is right there. If you go into the documents section, that is all the chart work I've done for my weekend commentary. I've got about halfway through the written part of my commentary. Now I write 5 to 6 pages. There's a lot of data in the commentary, but you will become accustomed to reading it as you go along. And there's, believe me, 34 years in the industry, I don't have the data in the commentary because you're not supposed to look at it. It's there, and the way I look at the markets, and I'm going to take you through this today. The way I look at the markets is I look at the whole of the marketplace. I look at this side of the pond. I look at the DAX and the Eurostoxx, and I try to put all the pieces of the puzzle together and come up with a way to make a market determination, make a market call for the next day. And like Morgan said, one thing I'll tell you is, you know what? I don't always get it right, and there's times I'll get it wrong 2-3 days in a row, and I'll finally say, you know what? Let's call it like it is. You know, I'm a schmuck. Let's move on. We will get this right. And as my readers know at the moment, I have been smoking hot of late. And believe me when I tell you, I have a P&L to prove it. So you throw all those pieces of the puzzle together. There is I've done a webcast for Morgan. I don't know if you could want to put that link up there, Morgan. It's great. But I have quarterly, semi-annually, and annual deals. I think they all include a free month. And what I will do is, if you sign up today for any of the packages, I will send you an email. I'll find out through Morgan through PayPal, and I will send you an email and tell you when would you like to start the service. And you might be going away. You might not want to be trading in December, or you might be wanting to go away for the new year, and you won't be back until January 10th. You can tell me, you know what? I want the quarterly deal with the free month. Start me on January 10th. So basically, we'll have what's that? February, March, April. It will run till May 10th, and it's $599. That's the quarterly deal. I figured it out to be that's $7 a day. Who went out to dinner last night and gave their waitress a $15 tip? $7 a day for 34 years of market experience. $7 a day to find out about a little sell signal in the gold market. Wait till I show you the signals I have coming up here today, like the sell signal I received on Friday in Apple, like the sell signal I received on Friday in Google, like the sell signal I received on Friday in the NASDAQ, or the sell signal, and I just found this morning, Yahoo. I mean, come on, these are the big players, and you want to be bullish in December? I don't think so. So let's get onto it. Let's pull up this Apple chart. I had this up earlier. That little ding means that that's the sell signal I received. Here's Apple. You know, this might be, if it's a little bit too much for you, it is what it is. We have these gaps here that go back. As we know, Apple had a huge year this year, right? Now, I want you to have a good think about this. And this is, and I wrote, and I featured the Apple and the Google and the NASDAQ charts in my weekend commentary. And I wrote a little bit about this morning. You realize on December 30th, 2011, Apple closed at $405 a share. Right here on September 21st, Apple traded as high as $705. That's a $300 move on a $400 stock. That's a 75% return on investment. 75%. This stock proved me wrong all year long. I am a huge believer in one stock does not make a market. Well, this stock proved me wrong all year long. This stock went up 75%, and the whole of the stock market went with it. And when this stock turned, we had a little suspension gap here, or measuring gap here, and the minute I saw this gap, I said, "Oh my God, the objective's 501." And you know, everyone's like, you know, and they're buying calls. You know, when the stock is 570, they're buying the 600 calls, and you know, obviously they just got hurt. The stock actually went down to 505. I missed my call by $4. Whoop-de-doo. You know what I mean? I mean, look at how quick it happened. And I wrote about this every day. We're going to 501. We're going to 501. You know, be short, be short. And while this is breaking, the NASDAQ's breaking, and every day we're just waking up and we're selling it every day. Just sell it. You know, you don't have to sell Apple. You can sell the NASDAQ. You just sell it every day. And, you know, then we obviously had the big turnaround. But what I'm saying, and this goes to the psychology of the market, and that's what we're talking about here. Is what I do with my business, and Chet Fisher will agree to this. I not only talk about the actual physical side of trading, but there's the mental side of trading, and right now I am so in tune with fund managers and their head when it comes to Apple. 75%. What happens then? Greed and fear, right? So they get greedy. Right now, as of Friday's close, and you can see we got a little sell signal here on Friday. As of Friday's close, this stock is now up 24% in 2012. 24%. If they haven't taken their profits yet, what are they going to do now in the last month of the year when there's a high probability that the capital gains tax is going to be changed next year? Let's think about this move here. This is the psychology of the market. I mean, this is a steep move. You know, I could take this chart and do one of these. Sorry, that little dinging is I could do one of these, and you could see. I mean, this was a steep climb, but this is pretty steep here, right? And these are these gaps that go back here. This is but anyhow, it doesn't matter. I'm an old technician from way back, and I'm a big gap guy. And but anyhow, so the way I'm looking at this is a pretty steady decline here. I mean, this was no joke. This started on September 21st, ended on November 16th. I think I looked it up. It was exactly 8 weeks. Look at this, but now look at this. This is kind of a good. This is falling out of bed kind of stuff. This is scary stuff, you know. And the way you measure this, you measure from here to here, 705.07 to 505.75, $199.32. The high on December 3rd, 593.60. You subtract 199.32 from 593.63. My target is 394.33. 394.33. They all told me I was nuts. They all told me I was nuts when I was calling for 501 and we got down to 505. What do you think they're calling me now? You can call me whatever you want to call me. I don't really care. In 2008, I told them the Dow was going down to 8,000. They all told me I was nuts. It went down. And I was wrong. It went down to 6,500. I'm not nuts. I understand. I understand about the psychology of the market. I understand about, and one thing I don't know what you're nuts, but with money, I don't know what that means. But one thing I will say is, I try not to read the chat, and let's keep it nice in the chat today, because at the end of the day, this is my show, not your show. And if there is any sort of negativeness in the chat, I have my good mate Chet Fisher has my back. You'll be kicked out of the room, just so you know. I mean, I'm bringing 34 years of market experience into this room today. I don't want anything to go. I get thrown off track when I see negative stuff. So we'll just boot you out of the room, plain as can be. Anyhow, so what I'm thinking here is, and this took 8 weeks. This next break could take 4, and it could be quick. And if you look at this, I mean, 394 is only down here. There's a 79% Fibonacci level. Here's another thing you could look. This is another thing you could learn from me. Learn Fibonacci and learn this 79% level. This is a huge, huge level. It's uncanny how well it works. I have a gap from December 2011 at 384.85 to 87. So if this market starts to go into free fall, you're looking at these levels right here. When and if Apple gets down to these levels, and if it happens quickly, these are the levels you're looking to buy, or maybe take a shot and buy some calls. We have the New Year's gap on December 30th. The market closed at 405, and on December 30th, the high was 406.28. On January 2nd, it opened up at 409, and it took off, and it never looked back. Well, guess what? We're going to have one little look here, and I don't. And this is what I wrote in my. And this is what I wrote in my weekend. I actually wrote it this morning in my weekend commentary that will go with those charts that I put out. Would you consider a return on a stock in a year of 10% a good return? Yes or no? Type it in your room. Yes or no? A 10% return on a stock in a year is a good return. Yeah, absolutely. Look at all those yeses. All right. And then those are just, being silly. Okay, if Apple returns 10% in 2012, that means it needs to break another $90. And we all know how the pendulum swings in this business. It will always exaggerate itself to the other side. So that's what I'm looking at. This is my target, 394.33. Look at the severity of this. This is serious. Do you realize? I think I did the math from the 593.65 high to not even to this low, but to Friday's close is an 8.8% sell-off in a week. 8.8%. You know what? John, I'm going to answer questions at the end of the day. So 393, Martin, listen up. I just said, but by the end of the year. And I'm actually thinking, well, if you subscribe to my service, I've actually written in there where I think we could get there before Christmas. But anyhow, now I've gone off track. Oh well, the hell with it. See, that's what happens. You just type all those questions in there. I'm on a roll, and then I get off track. So anyhow, that's what I'm thinking about the marketplace in general. If Apple took us up this year, the NASDAQ took us up this year, I think Apple's taken us down in the month of December. I mean, there's everyone and their brother is calling for a ho, 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 the Santa Claus rally. Well, let me share something with you about the Santa Claus rally. The Santa Claus rally, everyone thinks it's the month of December. It's by definition, it's the week in between Christmas and New Year's. So that's what I'm thinking. If we get Apple down to 390 something, and then the weekend between Christmas and New Year's, it could rally 40, 50 bucks and close 10% higher on the year. Everyone says, well, beautiful, Apple closed up 10%. And the fund managers are going, I haven't made 75% in the last 10 years. I can't believe I left 75% on the table. So that's what I'm thinking. And as Apple goes, so goes the market. I told you earlier that Apple proved me wrong all year long to the upside, and Apple's proven me wrong all year long, since September to the downside. Apple led the market higher, and it will lead the market lower. And because of this sell signal, because of the severity of this move, I'm bearish, and I am good time bearish. So that's Apple. Let's throw up Google. That little ding is another little sell signal. Here you go. Is this a bubble? I don't know. I mean the stock closed at, where did it close? 649. It was up another, what's that? 130 bucks, 125 bucks. It was up 20% this year. Look at the way it sold off. It, like Apple, it hasn't recovered. This actually looks like a Head and Shoulders bottom. And when I pull up my NASDAQ chart, it was something I was calling for until Friday's action. And this is a sell signal in Google. I mean, this is technical perfection here for the bears. The market sells off and it holds the 200-day. This I don't know what color this is. I'm colorblind, but it holds the 200-day moving average. And now it ticks back up. The 50-day moving average is turned over, and it picks back up. And on Monday, it tests the 50-day moving average. On Friday, the market falls out of bed, closes lower on the week. We get a sell signal. We're going back down here. This is what I feel. We're going back down here, and if we get through this 643 level, 643, 645, Google could be lower on the year. After everything this market has been, as good as this market has been all year, I mean, Google could end up lower on the year. I mean, come on. This is one of the market indicators. I listened to a gentleman, I think it was Barry Ritholtz, who was talking about when times become tough, the first thing you do is you look to sell tech. And tech isn't going up. I mean, tech isn't going up. And as I sit here, and I talked about this on the DAX chart, one only knows why America has turned, and I don't think a lot of it has to do with the fiscal cliff, actually, because it's not going to affect the markets that much. I think a lot of it has to do with with regard, and I'll talk about this more with the euro currency, but with the euro currency, with the DAX, that's the Germans, that's the Bundesbank. They're in charge, they're in control, and when the Bundesbank, they like the strong currency theory. I'm thinking this week is a very, very important week for, and let me just throw up, I'm going to throw up a DAX. Here's a DAX chart. This is new highs for the year here. While the NASDAQ, everything is trading down in this area, the DAX is trading at new highs for the year. Guess what? The RSI, 7502. I mean, this is a Fibonacci extension. We've had 2 consecutive closes above this old high. We'll see what Monday brings. But it's like I wrote my weekend commentary. I have a funny feeling next week is going to be a Humpty Dumpty job. The bigger they are, and they all fall off the wall or whatever. However that nursery rhyme goes, I'm not too sure. But I don't like to feel something stinks. And what you really have to do is you have to keep a real close eye this week, I believe, on the euro currency. If the euro currency really begins to weaken, we're going to get some action to the downside. All right. There's a couple of different things here. This is what they call, and we'll talk about this possible head and shoulders bottom in a little bit, because it is up, until this move here on Friday. See the sell signal in the NASDAQ, and look at it, tested the 50-day and the 200-day, and they're ready to cross. This is not a good sign. This is a technical, had a great fall. There you go. Thanks, TJ. This is technically really, really bad. And, I was looking for a positive payrolls number on Friday, which we received, and then this happens. I'm thinking, here we go. We draw the neckline in here, and we're headed up to here. Now I'm thinking we're coming this way, and we're coming this way, and we're coming hard. But this formation here is called a complex head and shoulders top. And this day here is September 21st. That's the day that Apple turned. Look, I have a sell signal here. I have a sell signal here. Let's go back to our Apple chart. This is the trading system I was telling you about. Here's the sell signal here. Here's the sell signal there. Where was I? And anyone who's been at my webinars, you know all about the sell signals that we've had in the Japanese yen. A complex head and shoulders top means there's more than one shoulder. Here's a left shoulder and here's a right shoulder. Obviously, these were the first two shoulders that I spotted, and this was the neckline. When we broke this, we had a return to the neckline. We actually had two consecutive closes above the neckline, which scared me, and I thought, oh, this is a false breakout, and this market's going to fly higher. And then the minute you trade back below the neckline, it's like, nope. And the first thing I did, the minute I saw this trade back to the neckline, I looked left, and I came up with another shoulder. So now I have two left shoulders, two right shoulders. I have two necklines. Market breaks the neckline. Almost all head and shoulder bottoms have some sort of return to the neckline. Here's our return, and then the market fell out of bed. I do believe if you measure from right here up to here, you add that on to the break of this neckline. The objective was 25. I can't remember what it was. I think it was 25.45 or something like that. The only thing I know is we met the objective, and then the market turned. So what I'm really I was at one time, I was thinking that we would get a lot lower and come here and then go build another shoulder, and we may have that. We may have that in the E-mini S&P chart, but this was technical perfection, and oh, well done, Tim. Well done. I'm really pleased to hear that. And I'm short over the week. I've been short that yen for 650 points. And let me look on my card. When am I going to talk about the yen? Not for a while. We may have to squeeze that in next. But so now that this will no sound. Well, those are your issues, Kirk. Now we have possible left shoulder, possible right shoulder. You basically will take your line like this and drawing your that would be your neckline right there. And if we get above there, then the objective is here. I'm looking ahead. I'm believing in my sell signal. I'm believing that the 50-day and the 200-day are going to cross, which is bearish. And I'm also thinking that this test of these two levels, and they couldn't get through it, is not a good sign. This is not a good sign. And I'm pretty sure I wrote if we get a close here below this 2602. Then we're coming down here. And you have to remember, everyone's bullish. Everyone's bullish. It's December. It's December. This is the month when the market this is the month when the market rallies. Everyone's bullish. This could get ugly, and it could get ugly in a hurry. So keep an eye on this level, this 26. If we get a trade convincingly, I believe, below this 25.95 level, it's good night Vienna, and I think it could happen as early as Monday. All right, we've been talking about, I want to just throw up the E-mini S&P chart real quick. Don't you worry. I've got more than enough time for this yen. I've been on this yen. That chart is so pretty. This is the chart that obviously is going out to my clients this weekend. You can see how the NASDAQ is coming this way. Well, the E-mini, S&P futures, the Dow futures have traded up here, actually. Believe me, if the Nasdaq's going lower, this stuff's going with it. And I like the way, I mean, you could see how the Nasdaq is 50-day and 200 days, have met here somewhere. These haven't even crossed yet. This market's been hanging in. But if the Nasdaq goes, you could see, is this September? We're September 21st. One of these is September 21st. But this market came all the way back up here again. This is October 5th, where the Nasdaq by October 5th was already trading down in this level. It never recovered. And sound in and out. Is Harry the only one having issues with sound? Or can everyone hear just fine? Okay, good. Sort it out, Harry. I can't figure it out for you. You probably got to call one of your kids like I need to do. So, what I'm trying to say is I'm technically challenged. But anyhow, this is my E-mini S&P chart. We finally got a close above this 50-day moving average. The reason I put this chart up here, I'm a big Fibonacci guy, and 61.8 is in my mind. And wait till I show you the British pound chart later. 61.8 in my mind is one of the most critical Fibonacci levels in the book. And when 61.8 comes into play, and it proves, and like it did here, it traded up, 61.8 comes in the S&P's at 1419.19. And when it proves its weight, when it proves its worth, and it holds, and the market turns, I look for a more sustained move. Yeah, we could be looking at another 4 to 6 week, 4 to 6 month move here if 61.8 really comes into play. So you can see we tested it again on Friday. And now the market's going to come off. And one thing I can tell you is when it comes to my indice charts, you do notice these gaps. This chart is based on the cash open and close. This is 8:30 in the morning Central Time to 3:15 in the afternoon Central Time. And then the market closes after that. I don't do 24-hour charts. And the reason I don't do 24-hour charts is because a chart like this will leave us gaps. Come on. Like a gap that we have here, or we have a gap here. This gap here is from November 2011, 1171. Back in when the stock market started coming off in 2008, and we're coming off hard now. And what I would do, I would go back and I would look for a gap, and I'd find a gap from 2005. And I'd say, okay, this is our target. We're going down to fill this gap. And the gap would be like 70, 80 handles lower. And honest to God, and the way the market was breaking hard, we would go down, within 3-4 days, every day I'd be writing, just sell it, just sell it. We're targeting the gap, we're targeting the gap. And we would go fill that gap, and then the market would trade maybe 10 handles through the gap. And then the Fed would cut interest rates, or the Fed would do TARP, or the Fed would do something bullish, and 24 hours later, we're 60, 70, 80 handles higher. You know, the short squeeze would come. I'd let the smoke, 24 hours later, I'd let the smoke clear, and I'd say, okay, time to sell it again. You know, my objective is whatever. Dow's going to 8,000, whatever. So that's why I do pit session charts only, because they leave gaps. I mean, at the end of the day, you know, your Google chart, your Apple chart, they've got gaps on them. Those are pit session charts. You know, so why would I change it up and put on a 24-hour chart? That if you're looking for a 24-hour chart in the indices, you won't find one with me. You will find a 24-hour chart in the bonds and the notes and the currencies, but not in the indices. I believe in gaps. I'm old school, and me and gaps go back a long, long way. Hey, I'd like to say thank you to everyone who's here. There's exactly 444 people in the room. That's brilliant, brilliant. Thank you very much for joining. I mean, I just started. You know, I was thinking an hour to 2 hours. We're going to be here for 2 hours, so stick around. All right. So that's my E-mini S&P. I have got the bonds written down here, but we'll discuss those in a little bit, because at the end of the day, I've got some good education for you when it comes to the bond market. And one thing I'll tell you right now, we'll talk about this here real quick. This is what I learned about presidential election years and the bond market and interest rates. You do not sell bonds in presidential election years. And I've learned this for 30 years. I've believed in this for 30 years. I have good mates in the business. You know, when the bonds were 135.05, they're calling it a bond bubble. I'm shocked. I'm just shocked. You know, there's a couple of names out there, friends of Morgan's dad, who've been short bonds all year long. I mean, and they're getting crucified. And the bond market just keeps on going higher. And why is it you don't sell bonds in presidential election years? And why is that? Because obviously the party in charge would like interest rates to be low. If interest rates are low, it stimulates the economy. If the economy is good going into November, the party in control will retain the presidency for 4 more years. So why, my good friends, hold on, I've got to, just 1 second. I've got some glare coming on my machine. I've got to close some curtains. 1 moment. But you can take this one to the bank. You don't sell treasuries in presidential election years. End of story. And you know, even the likes of whatever the hell his name is, the guy on CNBC, Kramer. Kramer, at the beginning of the year, he wanted to sell the bond market. Why did he want to sell the bond market? Because he wanted to buy the stock market. Well, guess what? Last year, the Dow was up 6%. The Treasury bonds were up 22 full points, 700 ticks. So if you think there's a bond index correlation, maybe that one, there is. At times there is, but then sometimes the correlation breaks down. This year, I think the bonds closed at 144 in December. The bonds are trading 149. The bonds are up 5 full points, plus there's been some rollovers in there, some negative rollover spreads going on. You know, the bonds are up 5 full points this year, and the Dow's up, I think I figured it out, 7%, something like that. So, you know, yes, there's a correlation, but at times the correlations break down. So, you know what? We'll get to the end. I've got a couple ideas here, and I wanna throw this up first. Here's our bond chart. Okay, for anyone in the room, I mean, look what this is. This thing is traded sideways for what, 7 months? This goes all the way back to May of this year. 7 months we've been trading sideways. But one thing I could tell you about what we saw, what I know about payroll Fridays, on payroll Fridays, which is what we just had, non-farm payrolls, if the bond market closes, let's call it dramatically, I would say a full point is a dramatic move. If the bond market closes, in dramatic fashion, one way or another, in this case on Friday, it closed lower. On Sunday night, you close your eyes and you buy them. And I don't know if Sita Sun's in the room. Is Sita here? Yes, she is. Sita became a subscriber. Hi, Sita. Sita became a subscriber to my business like the week of a payrolls number. And I wrote in my commentary, I said, okay, well, the bonds were down, 40 ticks. So on Sunday night, you buy them. And she bought them, and the next day she's writing in the room, oh, I made 15 ticks on a bond trade. I've never traded bonds in my whole life. Thank you, Tony. Blah, 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 blah. On Sunday night, I'll be buying this bond market. I don't care where they open. I mean, I'd like to buy them unchanged. I would imagine they'll probably open a little bit higher, but I'll be buying this market. The pivot in the bonds, I think, is like 149. I don't know what it is. Do the PowerPoints. You could do your own PowerPoints. The high plus the low plus the close divided by 3 will get you the pivot for any market. So I'm targeting the pivot, and even though I'm really thinking if we have a really bad week on Wall Street this week, this market's going to fly. But I'm going to take on Monday, Sunday, overnight Monday, what the market gives me. And what I know about payroll Friday, big moves in the bonds, is they are a Monday fade. So I'll look to buy the bonds on Sunday night. So you can do with that information as you please. If I were you, I'd buy the bonds. Go make yourself a couple $100 and say, you know what, maybe I'll subscribe to that crazy man's thing. And like I said at the beginning of the show, do you realize that my service, now this is 34 years of market knowledge. I was a pit trader. I took my game from pit to screen, and I haven't missed a tick. And I am so smoking hot at the moment. My service costs around $7 a day. You realize on November 15th of this year, I celebrated 9 years clean and sober. I don't know what's happening. I think I blame it that I have clarity, right? But $7 a day. In my drinking days, I used to spill more than $7 a day. I was just in Chicago. I parked on some side street. It cost me $7 to park for 2 hours. Try parking at a hotel downtown, $50 a day. You're getting 34 years. You're getting it 5 days a week for $7 a day. You don't go. If you're a surgeon, you don't go to the operating theater without your tools. If you're a trader and you're going to work without my PowerPoints and without 34 years of experience for $7 a day, you really don't want to make money. And I will tell you another thing about this business. You need to get educated, because if I walked into an operating theater with a scalpel in my hand and tried to work on someone, I would kill them. It wouldn't work. I would need an education. What makes you think that you can walk into my operating theater and take my money without an education? This is what getting an education and learning about the markets, and that's the way you're going to make money. Doing your homework. I do my thanks to my subscribers, I do my homework on a daily basis. And because I would probably be lazy if I wasn't doing chart work every day, if I wasn't doing my PowerPoints every day. If you want to make money in this business, you have to do your homework, you have to have a game plan, and you have to get an education. And guess what? There's 4 seats left for TNT, January 22nd to the 24th in Mobile, Alabama. If you don't want an education, then just start buying E-mini S&Ps, without any of this stuff, and give me your money that way. There's no way that anyone should ever walk into my operating theater and think you're going to take my money. Get an education. All right, so take a little bit of that. Anyhow, Morgan said there'd be a little bit of passion here. And I've been watching the comment section. There's no one putting anything negative in here, because if you put something negative in here, Chet Fisher, who's in the room, he's got my back. You'll be gone. I will say something about Chet Fisher. This is a gentleman who has been in the industry 30 years. Chet was he worked for J.P. Morgan on the floor of the Chicago Mercantile Exchange, and Chet's been reading my stuff for about 6 or 7 years now. Chet Chet wrote some beautiful things, some really had some gracious words about myself about, I not only put out the physical side of trading, but the mental side is so important in this game. I always like to say, it's not Bernanke's not the problem. Obama's not the problem. They're not the one clicking the mouse. I'm the one clicking the mouse. If I lose money, I'm the problem. My biggest problem is that 5-inch gap in between my ears. I'm the problem. I had a very dear mate, some guy, and here's a double bottom in the bonds. A very dear friend who was calling this a rounding top. And yes, I agree, this is a rounding top. The only problem is, what the hell is this over here? There's a couple of tops over there. So, this should be up here if it's going to be a top. Tops aren't below a top. So, but anyhow, they're calling this a rounding top. Well, guess what this is? This is March 2012. What did I just say earlier? You do not sell the bond market in presidential election years. This same gentleman, he was a reader to my stuff. He was a free reader, not Chet Fisher, but someone else from the floor of the Chicago Mercantile Exchange. And he's sending me, when the bonds are here, this is 118 in February, March of 2011. When the bonds are down at 118, he's sending me emails. And this is a gentleman, a respected name in the business. He's sending me emails telling me, Tony, you don't know what you're talking about. Quit telling your people you're bullish. Bernanke is ruining the stock market, the bond market. This is a bubble. He's ruining it. And I wrote back and I said, I agree. I agree. But how come the price isn't going down? The price continues to go up. Well, guess what? This same guy was calling this a bomb bubble at 135.05. I called it a double bottom. And while this market was rallying, him and a lot of other people in the business who wanted to sell bond markets in presidential election years, morons that forgot the rules. The rules of you don't sell bonds in presidential. They wanted to sell bonds in president. They missed an 18 points. 32 times 18 is what, about 300. They missed a 300 tick. No, 600. They missed a 600 tick rally by being bearish. They maybe didn't lose money through all this, but they missed it. And I don't know. But anyhow, this was my call of the year. How do bonds correlate with gold and silver? Don't worry about it, Lean. Quit overthinking it. And guess what? And Tom Sosnoff has been short bonds forever. And guess what? He got it wrong too. And guess what? The bonds just rolled. If he rolled his bonds again this week or last week, the March bond was trading 40 full ticks underneath the deck. So if he's short bonds at 135.05, after 2 or 3 rolls, he's really short them out at like 132. So you know what? The guy's got a few pennies in the bank. He can afford to take the heat. What happens if we do a Japanese job, and for the next 20 years, U.S. interest rates are sitting at 0%? Do you think he's going to continue to lose money with every rollover? I don't think so. So anyhow, maybe he will. Maybe this will come to an end. But at the moment, it's not coming to an end. And I'm going to throw up now. Like I said earlier, that the bond chart and the note chart. I didn't put up a note chart today because it looks similar to that. But those charts are in 5 days a week in my commentary. This chart, I've been putting this. This is the 10-year monthly cash chart. This goes into my weekend commentary every weekend. And this goes back to 1994. I wish it went back further because I'm sure it's up here. I know interest rates have gone lower for 30 years. But you can see they keep on stair-stepping lower. Lower low, the high is below this high. Then we get another low below this low, a lower high. A lower low, a lower high, a lower low, a lower high, and now we're here. I'm not sure if this low is in yet, but what I do know is This month right here, this was a sell signal here. This is July of last year. This is when we were having issues with financing our debt, and that's when that this is July and this is August. September follow through. That's when Wall Street, I think the S&Ps broke from like 1350 to 1090 or something like that. So when the S&Ps go down, interest rates go down. This is the opposite of the bond. This is the cash market. So what do we do then? Then we built this, until before we had this break, we built this symmetrical triangle. And the way you measure a symmetrical triangle, you measure from here to here, and you add that down to the bottom. Well, if you add that down to the bottom, the objective is 0.698%. And when we broke this at like 2.5%. About 2.5% is when we broke the bottom of this triangle. And last year, in August of last year, I said, guess what? We just broke a symmetrical triangle. Interest rates the 10-year rate is going to 0.698%. And they all told me, Tony, you're nuts again. The 10-year going down below 1%, you're nuts. Guess what? It's at 1.627. It's a lot closer now to 0.75% than it was to 2.5. So maybe I'm not as nuts as everyone thinks I am. One thing I know is as long as I stay sober, I return myself to sanity, every day. So this is going to keep me bearish interest rates, and I think rates are going lower. And if we have the kind of year next year in the stock market that I think we're going to have, we will meet this objective next year. The problem then is, the problem with the housing market will be more than anything else. I don't think you'll miss the low in the housing market, but you may miss the low in interest rates. But what I do know about the housing market, when it bottoms out, and they say prices are recovering, there's certain sections of America prices are recovering, but if you put the whole picture together, they're not recovering. What the housing market is like any other commodity. It needs to bottom out first, and then it needs to build the bottom, and that will take a couple of years. And one thing I can tell you about this chart right here, and I can tell you a wonderful story about Morgan Busby. Morgan sent me an email Morgan just bought a new house about 2 months ago. And Morgan sent me an email and said, Tony, I want to thank you so much because I wanted to buy this house at the beginning of the year, but you've been talking all year about lower interest rates, and I waited, and I just locked it. I don't know, where'd you lock it in at, Morgan? 3%, something like that? And he said, I want 3% on a 15-year loan. I mean, he said, you know what, Tony, you saved me, I don't know, $2,000 a year, something like that. Whatever that is, that's, over 15 years, that's $30,000. And he's like, thank you very much. And, Morgan's he's a punk. He's 29 years old. Give me a break. Are you 29 or 28, Morgan? I know you just had a birthday. Look at that, 28 years of pain. Cub pain. Cub pain. Can you believe that? 28 years. Anyhow, sorry, Morgan. I could be here. Jesus, we've been here for an hour, and the numbers are going up. That's the wonderful thing. The numbers are going up. They're not going down. They're going up. Remember, I told you you're going to get a sales pitch today. $7 a day for this. Come on. I put this chart out every weekend. If you go into the documents folder, in the lower right-hand corner for the people who have just come into the room, and you click on that documents, there's a link in there. Scroll down, and you'll find a document that says TLP 2012-1208. Click on that link, and there's a download. You could download it onto your own computer, and that will be your weekend homework, because all those charts are going into my weekend commentary. Obviously, there isn't the written part of the commentary isn't in the section. The written part, I'm still writing it, but $7 a day. Come on, give me a break. Anyhow, if that's not your game, stick around though, because we got a long way to go. All right, we get rid of that. I want to throw up only because I put this chart every weekend. I put this chart into my weekend commentary, and I have to show it to you. You know, I mean, there's a lot of people here that have seen this before. There's some people here who haven't. This is a 10-year note monthly chart. You know, this goes back to this is a channel. This is a beautiful, beautiful channel, and you can see here, 2003. I mean, this is the start of the channel, but look at the move lower. Boom, dramatic. 2008, look at the move lower, dramatic. Look here. There's no dramatic move lower this time. That's telling me that we're going higher. That's telling me that you draw a parallel in up here, and that's where we're going. Look, every time, boom, down, boom, down. We're not going down this time. We're riding this pony higher. And what I do from a technical point of view, I always look for 2 consecutive closes for a breakout. And here's one close above the line, came back below it. Here's another close below the line, came back below it. Now we're sitting here, we're riding this pony, riding this thing, waiting to go. This month here is December. You know, if we get this close here and January follows through, we're going higher. And if the 10-year note goes higher, that means interest rates are going lower. That means that 10-year monthly cash chart I just had up there, we have a very, very good chance of going to meet that 0.698 10-year rate. Don't even think about it. And think about this. And people will say, well, wait a minute. Who would invest in, you know, in debt at, you know, at the bonds at 2.5% or the notes at 1%? There is X amount of money every month that needs to be invested in either the stock market and or the credit markets. Well, think about this for a second. John Corzine tried the European bond markets. How'd that work for him? You know, are you gonna be a fund manager and try to do a John Corzine, or are you just gonna throw your money in U.S. security, in U.S. Treasuries? At the end of the day, at least if they can't fire you for investing in U.S. Treasuries, but they can fire you for investing in Spanish bonds or Italian bonds or French bonds, but they won't fire you if you're invested in U.S. Treasuries. You may lose your job. I mean, there aren't too many 2-year note traders left anymore. Citibank just announced 11,000 jobs to go. Oh yeah, and we got a great economy going. Yeah, wonderful. Yeah, great. Yeah, absolutely. All right, here. Just looking at all this. Anyhow, that's my monthly chart. That goes out every weekend in my monthly chart. Also, there is a I also offer a weekend subscription where it's just the weekend only. So it would be all those charts. Now, obviously, I've thrown a few extra charts. I think I've got about 20 charts in this weekend's commentary. Normally, there's a good, though, 15 to 16. I've thrown in a couple extras today, you know. And, Morgan, you may have to sit here until noon because I'm on a roll. But the weekend commentary, I think, is $79 a month, and it's the weekend only. And it also includes, and a subscription to my service, also includes a Monday. We also do this again on Monday at 10 o'clock in the morning. We come here to the pub. There's a password. It's password protected, and we do this again. That's if you subscribe to the daily subscription or the weekend only subscription. We go through this again. And the Monday session that we do is there isn't 440 people in the room. There's usually about 20 to 30, and it's a little bit more, you know, hands-on. You know, there's a lot more questions, and people are able to ask a lot of questions. So, you know, and we'll touch on a few things. You know, more than anything, it's a good education, but it's a good, you know, okay, well, Tony just wrote this extensive weekend commentary. Now tell me on Monday what you're thinking and why you're thinking it. So, all right, let's go have some fun. All right, for starters, you know what, let's do a poll real quick. Let's get everyone involved. Why not? A poll, instant poll. Who has seen TLP's webinars before? Yes. No. Did I do this right, Morgan? Oh, yeah. Well, that's good. That's good. At least it looks like it's 2-1. Knows the yeses. So that's good. So right now I've got 70 yeses. So 70 people. What have I been talking about all year? What have I been talking about all year about the yen? Anyone been short this sucker with me? Here we go. This This is going, yeah, Randy Ertmer. Randy Ertmer, he's only been a reader of mine for, how long have you been a reader, Randy? 4 weeks? 5 weeks? 3 weeks? Randy's been short the yen, I think since 123 something. Yeah, 3 weeks. Since 123, he's made 200 points. How many have you been short? One lot, two lot? One lot makes him $2,500. What'd you pay for my service? Like $200 for the last 2 months or something? I offered a special deal and he took me up on it. You know, 10 times his money. Anyhow, here we go. Yen sell signals. Yen sell signals. These little diamonds above here. That's the computer generated 2 lots. Wow, $5,000. Well done, Randy. And that's only the yen. I know you've been jumping on my coattails on a lot of other trades as well. And as a lot of my readers here know, I've been smoking hot. And if you jump, when I get like this, if you jump on my coattails, boy, there's a lot of money to be made. But these little diamonds above these bars, those are sell signals. And that's my computer generated trading program. And you can see this market bottomed out here in June 2007, and it's been one way for 5 years. And this first sell signal I received in what is that, October 2010, that started giving me a warning flag. And as I'm getting more, I'm getting warning flags, and I'm thinking, you know what? I think this yen is topping out. And what's happened? I mean, it's taken 2 years to build this top from shoulder to shoulder. Now think about this. We had a head and shoulders top in the Dow Jones Industrial Average, in the S&Ps, you know, in all those indices back in 2007, from shoulder to shoulder back in 2007, 2008. Well, actually, it was 2007, was 6 months. This left shoulder here is March 2011. This right shoulder is September 2012. This is 18 months from one shoulder to the other shoulder. That is huge. And what that's telling me, the move lower is going to be huge. Huge. So, we caught this move. Didn't we caught this one, Morgan, back in February? Remember that? February and March? I thought it was going to go then, and then it bottomed out here. And the minute it bottomed out, it started to, and believe me, I didn't cover down here because I was looking way down here. And when it started, I think I watched it all the way down to, like, what's the low? 118.79. I think I covered back around the 122, 123 area. But I was short up here, 128, you know, and I was riding it. And that's it. I'm a swing trader, and when I get on trades like this, you ride them. You get on it and you ride it. So I left 300-400 points on the table. That's okay. I still took 500-600. But then, you know, as this bottomed out here, I'm saying, okay, now I have these diamonds, right? These diamonds are giving me, are telling me that this 5-year I'm building a top. So now I'm a technician, right? So now I'm looking for a technical reason to be short this market. Well, when we started bottoming out here, I said, you know, I knew I could draw a neckline in here. So I said, you know, maybe we'll go and build a right shoulder. And bloody hell, look what we've done. We have built a right shoulder. And okay, this month right here is October, right? Okay, so what I want you to do here, and this is, I wrote to my people and I told them, it's October, it's time to sell the yen. And why did I do this? because this parallel line here, this catches these two lows, almost catches this low, almost catches this low. That's a real good line. That's a real good line, right? That's a support line. If you look at this line here, that's parallel. This line is parallel to this line. And guess what? This support line is parallel to these two. So what did I do? I mean, this was too easy. What did I do? I went and counted this. 1, 2, 3, 4. It broke in the 5th month. I said, okay. So let me start there. Here's another parallel line. And this one was higher. So I counted 1, 2, 3, 4. Oh, guess what? October is the 5th month. So on whatever, October 1st, 2nd, 3rd, something like that, I sold 2 Japanese yen at 127.19, and honest to God, within about 3 days, they're trading 128.39. Now, I'm a swing trader. I'm looking for 105. So if I'm looking for 2,200 points, I can afford to take, basically my stop was going to be 300 points. My stop was going to be 300 times 2 is 600. My stop was going to be a $7,500 stop on a 2-lot, right? And I also knew that, you know what, this is all telling me that I'm right. I'm right. You know, people ask me, they say, what's your target? Where's your stop? I said, I don't want to think about a stop right now, because if I think about a stop, that means I think the trade could be wrong. I don't trade to be wrong. I trade to be right. And they say, well, where's your target? You know what? I'll let the market tell me where my target is. You know, I'll be trading this, and I may get something in gold, or I may get something somewhere else, and it'll be like, uh-oh, warning flag, I need to take profits in the yen. You know, I mean, I don't have stops. I mean, I use a stop. I go to sleep at night with a stop. My stop is usually, I put out a TLP gut trade this past week in the S&Ps to buy them at 1407. My stop was 1394 because I didn't want to get stopped out, but I had to go to sleep with a stop somewhere, so I put it at 1394. You know, the next day I sold them at 1411. Okay, everyone's going to say, wait a minute, you risked 13 points to make 4? You know what? When I put out gut trades, usually those gut trades are good for 15 to 20 points. But that one wasn't. But you know what? It was a winner. So who cares? You know what I mean? Anyhow, back to this. So the market breaks in October, and now we're on one here. When we broke this support line, I sold another one. When we broke this support line, I sold another one. And right now we are playing with the neckline right here at 120.25. If we go through this neckline, and you don't even want to know how many of these I'm short these days. I sell this thing every day. When it's higher, I sell more. You know, I take 10 ticks, 20 ticks. I use my PowerPoints. If they trade up to a point, I sell them. You know, if there's a day when we don't trade the pivot, you know, I'll wait and I'll cover some of my shorts. And the next day we go back up and we trade the pivot and I sell them back out. I've basically run this trade for 650 points. 650 points. You know, I'm short 7 Japanese yen over the weekend. I'm short 7 British pounds over the weekend. Let's play. Let's play. But what I know about this, if we get through this 120.25 neckline, the objective is 105.75. And usually what will happen is with head and shoulder formations, you should see a move down to at least this level here, which is about 118, maybe 117.5, and then maybe we'll get one return to the neckline. Not all head and shoulder formations have a return to the neckline. Not all. And I'm going to throw one up here for you in a little bit, which will show you my point. And this is why I'm thinking that we're not going to see one here. And this is why I'm thinking this baby has got a long way to go, and it's going quickly. And I honestly think in 2 years' time, this yen will be trading back down here at 80. And you know the nature of the beast. Don't ever, I just wrote this in my weekend commentary. Don't ever underestimate the power of the bear. The bear will undo years of hard work in a matter of months. The bear will undo months of hard work in a matter of weeks. The bear will undo weeks of hard bullish work in a matter of days. Don't ever underestimate the bear because when they decide, you know, when they decide it's all over and that we need to sell, people don't care what the price is. They just start screaming, "Just get me out." I think that's what we're going to see in Apple soon. But So this is my yen. You keep an eye on this 120.25 level. If we break this, it could be good night Vienna. But now I want to throw up a chart, and I think I have to go to a different page. I want to say I have to go to page 3. All right, hold on here. Hold on here. I just have to do a little bit of something. Hold on. Where'd you go? I think it's right here. No. We had a Head and Shoulders top somewhere. Hold on. Is it here? Who's in the S&Ps? In the S&Ps. I have to be on the wrong page. Sorry. I'm going to get you a chart up here. You have to see it. All right, well, it was a good try. Didn't even the S&P chart that we had a Head and Shoulders top in this thing. Maybe it's here. Oh well, I can't find it now. I think this is it right here, actually. That's 07. We had a left shoulder here. We had a right shoulder here, and you drew in your neckline like here, and you can see, so you measured from here to here, and the objective it was in the S&Ps. I know it was in the S&Ps. Well, maybe I got the wrong chart up here. Here it is, right here. I knew I had it. And look at these 3 sell signals as well. But anyhow, we got a left shoulder, a head, a right shoulder. You measure from here to here. I think the objective was 1140. You know, this low here got down to 1100. This was 2 weeks. Oh, sorry. Can you all see that? Does the chart need to be adjusted? Everyone with me? We still rocking here? Anyhow, when we broke this neckline, it went for 2 weeks. This is 2 weeks. Boom, done. Objective met. Market came back up and it had one more little look, and then obviously we've climbed higher since. But this here, I mean, look at that. That looks so much like that right there. I mean, that's scary. That is scary how much this looks like that other chart. So I'm thinking here, if we get through this neckline and we start going, if you start seeing a 114, 115 trade, we could be down here at the objective. This is the objective down here. We could be down at 105.75. Is that my objective? In January. I mean, that's a big move. That's 1,600 points. Do you know how much 1,600 points is on a one lot? Do the math. 1,600 times 1,250. That's about 20 grand on a one lot. You know, and I think I got 7 on. So you know, if I'm doing another one of these in February and in January the yen's traded 105.75, I might even lower the price of my subscription. But this is serious. The sell signals are telling me after a 5-year run, and with me and my work that I do, See how I've labeled this a possible head and shoulders top? Hey, Tony, question from Leon. Question is lower yen correlates with higher interest rates. Seems inconsistent. Leon, yeah, you know what, Leon? That's a fundamentalist thing. I try not to, the thing about trading, when you start thinking for a living, then everything gets screwed up. Quit thinking. Just quit thinking. Just believe in your indicators. I talked to a girl not too long ago. She's lost so much money and she thinks for a living. Could move back to the trend line before next failure. Wouldn't have a clue what you're talking about, William. Okay, now I lost my train of thought. Oh, well. Lower yen correlates with higher interest rates. Seems inconsistent with bond market. Yeah, I don't have a clue what you're talking about either, Morgan. So let's just make some money. Quit. When you start thinking for a living, thinking for a living would tell you that there's a correlation between bonds and the stock market. And like I said, last year the stock market was up 6% and the bonds are up 800 ticks. This year the stock market's up 6% and the bond market's up 150 ticks. So you see what thinking for a living gets you. Do you know what I mean? Just believe in you. Just whatever you got going, just believe in it. And I believe here. I believe. And I believe in my technicals. I believe in this trading system. And if we go through here and we start trading down here, then we really start selling this stuff. Then we really start selling it. So, all right, that's our yen. Look at us, an hour and 22 minutes into this, and we're only halfway through, baby. Let's rock and roll. Euro currency. Speaking of head and shoulder tops, from shoulder to shoulder. This is December 04 to April 11. This is a 7-year head and shoulder top formation. Are you kidding me? 7 years? Do you imagine how far this could go? Look at the objective, 7,800. Hold on, what did I do with my chart? Get back here. You realize 7,800 is down here? Is it going to go? Is it going to go? I don't know. One thing I know is, and one thing I could share with you, and I have a good mate in Gibraltar who shares a lot of real pertinent information with me via emails, and we're on Skype once a week, and I put his stuff in my commentaries, and there have been times I've shared his stuff. There's times in the course of the day, if I see something, I'll send an email out. I don't only just email out, at the end of the day. If I see something, in my commentaries, I let all my readers know what my positions are, where if I've gotten out, whatever. But my mate was talking to me about this, and you can see, here's a left shoulder, here's a right shoulder, here's your neckline. We get below 120. The objective is like way down here. 78. And what's going on in Europe at the moment? Okay, Celeste, I know you probably don't want to hear this, but Celeste is from Indiana. Are you still in the room, Celeste? Or are you done with me by now? Anyhow, I'm from Illinois. People from Illinois don't like people from Indiana. Do you think someone from Belgium like someone from France or Germany or we're all Americans. We don't like each other. These are just foreign countries, and they've all put a pact together. So if that falls apart, this could be toast. But on the other side of the fence, and this is information that was shared with me by my mate in Gibraltar. What really is the euro currency? What have we seen? What is going on in Europe at the moment? It's all Germany. It's all Bundesbank. And what does the Bundesbank believe in? Strong currency. So if they're thinking that if the investing public is thinking Germany is behind the euro, they probably don't want to sell the currency. Which is also a reason why I think the DAX and the Eurostoxx 50 are trading at new highs, because they believe that the Germans are in control, and at the end of the day, the Germans got it going on. So you got to be careful with this currency. I mean, it's been sitting up here at 130 for a reason. Like I said, I think this week, if you see this currency, this euro, begin to weaken significantly, and especially get through this the low here in November of 126.65, the DAX and the Euro Stocks 50 are going with it. And if those stock markets start to turn in a dramatic fashion, we're going to wake up every morning and go, oh God, the DAX is down another 100. Sell the S&Ps. Oh God, the DAX is down again. Sell the S&Ps. So keep an eye on this. This is kind of good. And now speaking of European currencies, okay, if there's any of my English mates out there, I didn't mean that. I know I lived in London for 12 years, and once I referred to my dear mate Nigel, who's a very good man. And like me, if I have 9 years clean and sober, he's like 13 or 14. But once I referred to Nigel as being European, are there any people from England here in the room? I know there were a few. Any of you out there? Anyhow, well, cool. So you'll understand what I'm saying when it with regard to referring to my mate Nigel as being European. He went off on me like crazy, and he's like, I beg your pardon. I am more American than Europe is over there across the pond. I am British. I am English. And I'll tell you a great story about Nigel. So Nigel tells me one day, he says, So Tony, if you were an American, what would you like to be? I said, oh, English, of course. I said, Nigel, if you were in English, what would you like to be? He said, dead. So there you go. God save the Queen, all that sort of good stuff. British pound, 162.98, 163.04. This is a double top. No, I beg your pardon. This is a possible double top. Like those, I was going to explain that before with the yen. I call it a double top is a reversal formation. There are basically, in my book of tricks, there's 3 to 4 different reversal formations. There's there's double tops, double bottoms, head and shoulder tops, head and shoulder bottoms, broadening top, broadening bottoms. I also look for islands, and we've had a couple island trades this year actually that were quite good. If we get below 152.67, the objective is 142.30. If Europe's going to come off, the pound's going with it. We had this. I've been short this thing from 159 around 159.40 and taken heat. But I'm thinking it's going to 142. So it traded up to 161.40. So you know what? I'm taking 200 ticks of heat. But I think there's 2,000 ticks in the trade. So I can afford to take 200 ticks of heat if there's 2,000 ticks in the trade. I added on up here, and remember I talked about before about 61.8? Here's our 61.8 level right here, 161.19. You can see it hit on it 2 times. It almost hit on it these other 2 days, and now the market's gone back, closed below it. We got a sell signal on Thursday. It followed through, so the sell signal was obviously a winner. And now I'm screaming, this is a false breakout higher. And we've had 2 consecutive closes now below the breakout area, so I got confirmation of the false breakout. And here we had 3 consecutive closes above it, and it failed. And the greatest thing about technical analysis is when a formation fails, it's even more powerful to the other side. So we'll keep an eye on things. You can see this is starting to turn. I'm thinking this market comes lower. These eventually cross. And if we get back to this 150 below 152.67, 2 consecutive closes below that, the objective is 142.30. And believe me, I've been short these for 2.5 weeks, but taking heat for 2.5 weeks. I'm still taking heat, and heat's the name of the game. My game. I'm a swing trader. Like my mate in Gibraltar said, some of the best trades in the book are the ones you take the most amount of heat on. He's the same way as I am. We have great market ideas. Sometimes we're just a little early. That's always been my problem. I've always been a little bit early. And my biggest problem has been and I over-egged the omelet too early. I would go all in at 159.40 and then finally stop myself out because I can't take the pain anymore. These days, I don't go all in. I go half in, and then if I've taken some heat, then I'll start. Then if I get the indication that the market's turning, I'll start adding on the turn, which is what I did here. But I didn't add on nearly as much as that I sold originally. But I'm short, and I like this trade. So, did I put up? I didn't put up the dollar index yet. Here's a good chart for you. I don't know. I mean, we're an hour and a half into this. I haven't lost too many, I'll tell you that much. Here's a monthly chart. Left shoulder, right shoulder. Here's our head. You draw your neckline in like this. We get above 87.10, we're going to 106.70. I for a long time, a real long time, have been bullish this currency. And I'm not getting off it. I'm remaining bullish, and I'll tell you why. A lot of people have been brainwashed into thinking that the dollar is a flight to quality. Okay, the dollar is a flight to quality currency, and you can see here, this low here, June 2008. This side of the head is March 2008. Well, what happened between March and June of 2008? That's when Wall Street started coming off hard, right? So, and then all of a sudden, then it really started coming off when the CD crisis hit, and we saw this huge flight to quality in the dollar. This is March 2009. What happened in March 2009? The market bottomed out. Wall Street bottomed out. So the dollar comes back off. Okay, now the dollar has another little pop. Do you remember what happened here? This month here actually is May 2010. Do you remember what happened in May 2010? Flash crash. So we saw another flight to quality in the dollar, right? Now the dollar's come off again. What? Why do we? This bottom here is May 2011. So this basically is April, May, June, 2011. I mean, we had that little bit of a, but this thing, right now we've got Wall Street basically sitting at 13,000. I mean, but the dollar's going up, and what I'm thinking here more than anything else is when I was talking about what was I saying here? This is March, April 2011. Do you remember I pulled up that bond chart before? That was also when the bonds were trading 118. That was March 2011. That's the smart money right here. Just like in the bond market, that's the smart money. That's where the smart money got into the dollar, and they're in it now. And this is a 50-month moving average. You can see this dollar is just hanging along this 50-month moving average. The 200-month moving average is way up here. I think this thing is going to turn soon. And when it turns, we've got a big move coming. And the dollar index is 58% euro. So if this goes up, maybe that euro is going to take out that neckline. Something to keep an eye on. I'm going to start, if this starts to uptick a little bit more, I don't usually include this chart in my weekend commentary, even though it is this weekend. And I kind of put it in there for this webinar today. But, as we start getting closer to this 87 level, believe me, if we start getting closer to this 87 level, that yen will be about 110. So, okay, there's the dollar. What else do we need to look at here? I've done the pound, yen, euro. All right. Gold, baby. There's gold in them hills. And what was that, Marshall Tucker, I think? Now, I don't think there's anyone in the room that was subscribing to my service back in 2005. And you could all tell me, oh, yeah, Tony, right. Yeah, whatever. You know what I mean? But I did. I started on the floor of the Chicago Mercantile Exchange in January 1979. By June, the Chicago Mercantile Exchange used to have a gold pit. And even though we only trade 1/3 of the size of COMEX, there was still a gold pit there. And I've got an arbitrage clerk job in the gold pit on the Mercantile Exchange where gold was 280. By January, February of 1980, gold was 850. That's the first time it traded up to new highs. And So I've watched gold ever since. I started my business in January 2002, and gold, this was a triangle, and gold actually broke out here. And on this little correction, I started putting out buy recommendations to my people, and I didn't have that many people back then. I think I had like 7 or 8 clients, 10 clients maybe, and I started putting out buy recommendations at 307, 308, and you go back, gold did nothing for all these years, and now I'm telling people to buy gold, and and no one bought it. No one did. No one. And then as it started eking up, in every commentary I was writing, in every commentary I put a PS. In every commentary I'm writing PS. Did you hear that? Did someone say buy gold? PS. Did you hear that? Did someone say buy gold? And when it got to 450, I have a couple of Goombas from Chicago, the Federikis. They bought a bunch of cash gold at 450. And then in 2005, when Ahmadinejad, the ruler of Iran, that was the first time he came onto the world scene. And in 2005, he came out with his nuclear threats. And I wrote a piece about a trip I took to Israel. And I met some high-powered Israelis. And the Israelis backed down to no one. And in 2005, I wrote a piece about if this Ahmadinejad, keeps up these nuclear threats, we could have trouble in the Middle East. The Israelis backed down to no one. P.S. Did you hear that? Did someone say buy gold? And gold was $525 an ounce back then. And my Goomba buddies in Chicago, they bought more gold at around the 550 level. They bought more gold at 750, and they still have it. And I've been telling them for the longest time, I think this is topped out. But anyhow, that's neither here nor there. But so anyhow, so we have this big move, right? This month here is August 2011. Gold in this month here has a $309 range. It was $309 an ounce only 9 years earlier. Now it has a $309 range. The next month it has a $370 range. What do we know about the highs and lows of moves when it comes to volatility? Volatility is always found at the highs and lows of moves, plain as can be. And I've been calling this a top for a long time. Now think about this. What else happened here in July, August 2011? That's when John Paulson, who's only had one good trade in his life, he shorted the housing market and made a killing in 2008, 2009. What did he do in 2011? Does anyone remember? He lost 52%. His fund lost 52%. I write so often, making money is the easy part. Keeping it is the game. And it is keeping it. And if you don't have trading rules, get to that TNT class on January 22nd to the 24th, because we're going to be spending a whole day working on trading rules. I'll tell you that for nothing. But anyhow, so he starts, John Paulson, what does he do? He decides that gold now is going to go through the roof. He's going to get his 52% that he's losing in the stock market. He's going to start a gold fund. He waits 9 years and $1,400, and he starts a gold fund. Are you kidding me? Are you kidding me? May I reiterate, you're only as good as your last trade. Your last trade, he lost 52%. I'm almost 100% sure, and I missed it, but I think they were talking about Paulson. Paulson got killed again this year. I mean, this guy can't trade his way out of a paper bag. And he's long a gold, basically around 1,700. Gold on Friday closed at 1,705. I think we're headed down. Believe me when I tell you. If we get through this 1520 level, it's 1450 in a hurry. That's just the stops. And when you hear on CNBC someday that Paulson is liquidating his gold fund, I'm thinking that'll hit the waves around $1,250. If it gets down there, okay, this is, tomorrow the Israelis can nuke Iran and gold's 2,500. So, and Paulson will have creamed it again. But if they don't, we need to shake out everyone. Everyone got bullish up here. Everyone got bullish up here. I think we're building a huge top. And I think in years to come, we will eventually Well, I think it will be Paulson when he finally decides to liquidate his fund. He will drive it down to these levels. And who knows? I mean, it could be down here at 1100, you know. And if you ever test this line again, believe me, every month, every weekend since I started my business in 2002, I put this gold monthly chart in my package every weekend. So we'll see how it goes. I'm bearish. I'm totally. We get through 15. Believe me, I'd be selling this on a stop. Well, believe me, if we get below 1600, I think. And here's another thing for you. See this high right here? This high is 1,034. This high was on March of 08. What happened in March of 08? Do you remember that? Do you remember that's when we started to see the flight to quality in the dollar? So is there a correlation between a stronger dollar, weaker gold? I think so. If that dollar chart I had up here before, if the dollar starts spiking higher, I think this gold's coming lower. And this high here is 1,034. This low here is 681. Think about that. That's 319 and 34 is 353. That's a 35% correction. 35% correction. This low here is October 08. I mean, it was quick, but that's a 35. Do you realize what 35% of 1800 is? What's that? That takes us down to about that 1250 level. You know, that brings us back down. And then, of course, you know, the pendulum will swing a little bit more the other direction. So, I don't know. I'm probably wrong, you know, but I'm telling you, I do polls all the time. And I take polls, and I'm like, do you think gold will be higher or lower than 1,700, you know, at the end of this year, at the end of next year? 80% of the people say higher. Everyone's bullish. I'm an old pit local. I don't like to be the same way as everyone else. When you're the same way as everything else, the market goes down so much quicker. So, and you know what? I'm going to throw up one more chart, and then I think we're going to wrap this up. Let's look at gold's cousin, silver. Here's a chart for you. Look what this chart has been doing since gold. This is August. Oh no, this isn't August. This is March, January, February, March. This is April 2011. Then this must be August. Yes, this is August right here. The highs keep on stair-stepping lower. The lows, we can see where support is. Support is $26. This is where support is, right here, $26. Every time we come down here, we squeeze up a little bit lower. Come down here, squeeze up a little bit lower. Do you really want to be long this? This is gold's cousin, silver. Do you really want to be long this? I know one thing. If we get below 26.10, I'm going to be selling this on a stop. I'm definitely going to be selling this on a stop. And look for whatever, 50, 60 cents. It's another trade. What's my next trade? That's the way I trade. What's my next trade? Like I put that trade out in the Treasury bonds. My next trade is, well, I'm short the NASDAQ because I got a sell signal in the NASDAQ. So I'm short that over the weekend. I'm short the pound. I'm short the yen, and I'm buying the bonds. So, and I'm buying them on Sunday night. I'm not looking for a lot. I'm looking for the pivot, whatever the pivot is. I think it's 149.28 or something like that. It doesn't matter. That's a trade. And then what's my next trade? But anyhow, there's silver's cousin. You know what? I've got it written down here, and it's such a pretty looking chart. I know it's in the commentaries. Let's just throw this up real quick. You know, and if you think I'm only about financials, I'm not only about financials. I watch it all, every bit of it. This is something I've noticed in soybeans. Anytime soybeans tend to top out around July, they bottom out in November or December. Here we got a top in July. We got a little top here in July, bottomed out in November. We got a top here in July, bottomed out in December. I'm not sure what high this is. That's June. Close, but no cigar. Well, they haven't topped out in July, but they did top out right here. But look, what it's telling me is I want to look to buy the market in November, December. You know, again, now we've hit on this line. So guess what? We've topped out here July, August, September. We've topped out again here if we get the move lower in the stock market, these grains will probably follow it. If we get back down here near the end of the month, I'm buying the beans. Why not? It's worked. It's worked for 6 or 7 years. Why not? What's my next trade? That's it. I'll answer a few questions. Don't make them too complicated. How about Yahoo? There you go. Hold on. Let me get this. Look at this nice little chart. Oh, hear that ding? Sell signal, sell signal, sell signal. 3 sell signals in Yahoo. I got another one on Friday. I got an RSI at 76.08. The RSI traded as high as 87. You are two things with this stock. You're either out or you're short. You are not long this stock. End of bloody story. Any thoughts on financials? Well, yeah, I think they're going up. Comment on crude. Oh, well, yeah, I like that about crude, actually. You know what? Crude is having a real hard time lifting its head, isn't it? Crude is really struggling to lift its head. Crude is, we had the good break, and now it's been sitting here in the mid-80s for a long time. That's another market you should keep a real close eye. Crude on Friday closed at like $86, 85 something. That's not a good. If the stock market was really good, crude would be back above $90. It's not. I know it just traded above there this week and sold off like the dog it is. Is this Monday? Yeah, Monday it traded $90.33. By Friday it was almost $5 lower. What about Apple? K-Cho, you got here late. I opened the show with Apple. K-Cho, go into the document section, and in the document section there's a folder on that says TLP 01208. Click on that folder and download it to your computer. There's a beautiful Apple section. Morgan's putting up little things about my service. Like I said, for 4 months it's $599. That's $150 a month. There's 22 trading days in a month. That's $7 a trading day. Who went out to dinner last night and tipped their waitress more than $7? Are you kidding me? Are you kidding me? $7 a day? Are you kidding me? Don't even think about it. You wouldn't go to work without your toolbox, without your work boots, whatever. Why would you go to work without this? My waitress is my wife. Well, there you go. Never mind. I'm not going to be chauvinist here. There's Sheila. Sheila, you've been reading for what, about a month and a half? Loves it. Anything else? Any other questions? What did Tony say about oil? I think it's going lower, BC. Natural gas. I got a buy signal this week that didn't work out too well. I lost money on natural gas on Friday. Hey, Tony, you saw a buy signal in I lost money on it. Amazon. I guess we could throw up an Amazon chart. I haven't looked at Amazon, and you know what? It wouldn't surprise me one bit. AMZN. Listen for the ding. No ding. I was thinking Amazon maybe gave me a sell signal. I don't know. Is it rounding? Do you sell Amazon before Christmas? Really? eBay. Let's try eBay. EBAY. No ding there either. You sell eBay before Christmas? I don't know. I don't even. I think eBay is a different kind of site though, but I'm sure people are buying Christmas presents on there. Maybe they're not. I don't know. I've never been to eBay. I like going into the store and feeling what I buy for a living. Cat. Well, Cat gave us a beautiful. I put this chart out a long time ago. Double top. We get through this level, we're going back down to like 40, something like that. This is a great sell China stock right here. What else? Aussie dollar. I looked at the Aussie dollar. It's trading sideways. I don't want to know. DSW, you don't want to know what I'm thinking about DSW. But you know what? I'll throw up a DSW chart for you. Guess what? We got a sell signal on Friday. Where's DSW? Hold on, I had it here. DSW. I had a sell signal. Oh, that's the weekly. Hold on. I got a sell signal on Friday. That is not a good looking chart. We got a big gap down here. This thing could easily trade back down to 62.5. That's a sell signal. And it's on the other side of after putting the top in. RSI is turned, and now it's really headed lower. I think this stock's in trouble. Corn, when we look for a place to buy corn. FCX, don't know what FCX is. Fire, I looked at a fire chart a couple of days ago. It's not looking too good, is it? I mean, it's trading sideways. It's not looking bad. It's trading sideways. But I mean, this stock just this week was $49. Now it's back down to 44. I mean, that's a 10% correction in a week. So, you got to be careful. TLT, TN, you know what? I don't trade ETFs. I had an account with Ameritrade for 3 years, and I traded. I thought I was the guru. I'm going to trade a few stocks. I'm going to trade some ETFs. I realized I know nothing about ETFs, so why trade them? I trade what I know, and I trade futures. Copper's not giving me anything. I've been putting that. There's a guy asked for this copper chart. Where's copper here? I have a huge triangle here in copper. I mean, this is a bearish formation. So if we get through this, I mean, 1, 2, 3, 4, it held on the 5th time. This is when it should have broken, but maybe it's just going to hold and come one more time. The only thing I know about formations like this, it needs to break out in halfway to 3/4, and I think we may even be past the 3/4 level. So this huge symmetrical triangle will no longer be any good. What else? ES, I already showed. It's already been shown. Coffee, I saw it had a big day on Friday. I don't know. I love coffee. I drink it every day. How much do you think of Washington's negotiations will? You know what? When you think for a living, it'll cost you money. Don't think. Just trade the numbers. Intel. I haven't looked at an Intel chart in a while. Let's look at one for the hell of it. Why not? That's that ding DM. INTC. Last I heard, Intel's been struggling a little bit. INTC. Well, that doesn't look too good, does it? I don't know. I don't know. Doesn't look too good to me. Even though, boy, this is really nicely symmetrical. See how nicely weighted this is? This could be a huge buy down here. Yeah, a huge buy, BUY. Or if we get through these levels, it's goodbye, BYE. Google analysis in Tony's PDF. Yes, it sure is. OCZ. Don't know it. Don't need to comment on it. Facebook's bouncing. I barely use Facebook anymore, even though one of these days I'll be having grandchildren, so I'm not going to get rid of my Facebook account. Odds on Alabama, Notre Dame. I don't know. Intel bottom fishing, possibly Google. It's in my commentary. You obviously didn't make here for it. It was recorded, Kathy. Thank you very much. Hey, $7 a day. Any more questions? It's really nice. There's still 416 people in the room. That tells me I feel I did a really great job. I've got a great commentary in me this weekend. You already saw the chart work. Hogs, huh? I looked at the calories. I actually bought some cattle on Friday. Yeah, how do you not like it? I mean, why not? Oh, that's the cattle. Hold on, that's the cattle. Where's the hogs? Hogs are right next to it. I don't know. I wouldn't sell them. Well, I don't know. I have no comment. DAX, I had a DAX chart up there already. Thank you, Barbara. Thank you. PCLN, Wood, Priceline. Yeah, who knows? Good stuff. Thank you very much. Starbucks. All right. Those prices we threw out there. It's $5.99 a quarter. You get an extra month. If you sign up on PayPal today, Morgan will send me an email with your name and that you've signed up for either the quarterly, the semi-annual, or the annual deal. Obviously, the quarterly is 4 months, the semi-annual is 7 months, and the yearly deal. So basically, I'm throwing in a free month. Basically, it's a marketing job. Okay, I'm selling here. You know what? It's marketing. Really, I'm selling 13 months for $600. I'm selling 4 months for $600, 7 months for $1,000, 13 months for $17.99. It all comes out to be around $7 a day. And but what you'll be able to do, if you sign up today, I will send you an email and say to you, when would you like to start your subscription? And you could email me back and say, hey, can you not start it till January 10th? So that means that it'll run until May 10th if you sign up for the 4 months. Personally, if you sign up today, I'd start it today because I think we're going to see some fireworks here in December, and I think there's some money to be made on the short side. Kinda, Ken. Do your high-low close, Martin, or just come sign up for my service. You know, I'll send you the PowerPoints tonight. Jesus, what's so hard? I mean, if you can make 10 ticks on a 1 lot in the bonds, that's $300. You do a 2 lot, and you've paid for the service for 4 months. How does market lack of it affect your profits? I don't trade volatility. I trade numbers. Thanks, Morgan. I made money this year. Oh, James Bond, you are the best. James Bond is one of my close clients, and this man, he's been short the yen with me. Well, have you got 600 points in it?
Hey, Tony,
we are making money this year, old Jimmy. Shaking,
Tony, go
shaking
through
but
a little
not
bit about
stirred,
what
or
they
shaking
get with
but
a
stirred, whatever.
subscription, like with the
Do you help with
subscription?
You know what? You know what? I used to trade in the pits. Intraday trading, no, I don't. Sorry, mate. You know, well, whatever. No, I don't. Is this, yes, it is. Who's this? Is this Delaney from Chicago? JD, is that you? Jeff Delaney, is that you, JD? You old dog? Yeah, don't answer me. That means that's you. No, okay. Who is JD? Do I know you? What does JD stand for? Okay. Well then, yeah, this is Tony Laporta. I don't know. I mean, are you? I don't get it. You know, are you taking the piss? What are you doing? I get 600. All right. Anything else? This special is 1 extra month for 6 months for everything. If you get 3 months for $5.99, it's a total of 4 months. If you get 6 months for $9.99, it's a total of 7 months. If you get 12 months for $17.99, it's a total of 13 months. Do the math. Yes, it's recorded. Click on that documents link and get on the folder. 30 years trading. Well done, JD. And you're still at it. Even more impressive, especially if you were a pit trader. You know, there's not too many of us that made it from pit to screen. Did you trade in the pits, JD? All right, I did that earlier, but I will do it again right now. With the daily subscription, what I put out is I put out my system trades. My system trades are the no, I'm a Chicago boy. My system trades are computer-generated buy and sell signals in certain markets. On Friday, I received system trade sell signals in the NASDAQ, in Apple, in Google, in Yahoo. Those I try to put out. Sometimes I'll send out an early email telling my people, hey, I'm getting an early sell signal in a certain market. You know, those are my system trades. They're computer generated buy and sell signals. The system trader, it takes the emotion out of trading. The next thing I put out are my PowerPoints. These support and resistance points are determined strictly on the high-low close from the previous days. Well, obviously that day's trading. So I put those out, and then after I put out the points in the system trades, then I do my chart work, and what I see in the chart work, and my chart work is basically every day I put out a bond chart, a note chart, a euro-dollar interest rate chart, E-mini NASDAQ, E-mini S&P, and E-mini Dow futures, and I put out a DAX and a Eurostoxx 50 chart. Every day, for sure those 8 charts go in the commentary. Last week, almost every day, I put out a British pound chart because I'm quite keen on this pound at the moment. And whatever's flavor of the month. For the longest time, I got short corn above $8. And I was telling everyone it's going to 728, going to 728. I've got a symmetrical triangle, and if it goes the other way, it's going to go quickly. Bloody hell. We went traded down to 710. 2 days later, there was a report out, and corn was back up to 760. It's like, well, that's why you take your profits at your objectives. So anyhow, so then I usually try to get my commentary and charts out by 6 o'clock Central Time. So that means on Monday, at the close of Monday business, I will send out the system trades for Tuesday. I'll send them out on Monday. I write a day before the market. And what I know about, and I have offices in London that read my stuff.
I thought that was great.
I think the DAX is going lower.
Be sure to thank all the people who subscribe.
They get a lot of stuff
Celeste
in their email box.
Chuck
and
Ebert,
they go straight
Wilton
to my
Black
commentary.
joined us,
Because
Dave
basically
Barton,
what my commentary
Tim
does
Iafolla,
for someone in Britain or
Brent
in Europe
Wendell,
is it
Jay
kind of gives them a little
Wigstone.
recap
We appreciate all
of
you guys
how
joining us so far. I know
America finished.
got some more coming
and
in.
then,
And I can tell
and
you
then
honestly,
it gives my
the
view
reason
of what
Tony's
I
here
think
today
for tomorrow.
is because I actually
so they get to wake up and see, okay,
paid for
what's Tony
service a
thinking,
year
sort of
ago.
thing.
And
I have a guy
try to put
who
people
worked for
on
the
here
FT.
that we believe in and that we think
he said,
do an
he gets
outstanding
100
job,
emails
and
a
I
morning,
think that
and
you guys
mine's the
saw
first one
from
he
this
goes to.
webinar that Tony's
so
very
anyhow, so I
passionate.
send
He
those three
understands
things
the
out.
markets,
I
and he
send
knows
those
what he
out
thinks.
daily.
So
Obviously,
we
my
appreciate
weekend
you guys taking the
commentary is
time
a
to
bit
be
more
with us today.
extensive.
We will
and I put out a lot of
post the
information.
recording on our website. We'll try to post it. It'll probably be later today.
Morgan, do you need anything else from me, or did I explain it good enough?
Sales page. If you go to
if you subscribe, we do one of these sessions every Monday at 10 o'clock in the morning.
And choose which
thanks, Bill Barrett.
you want.
And
we're emailing for all the
and
people
and even if you subscribe just to the weekend only, you can still join the Monday morning webinar.
So
and
thanks to everybody for
usually
being
about
with us.
45 minutes to an hour.
It's
a bit more personal. You get to ask a lot more questions,
and
we do what we need to do.
We really appreciate you being
Morgan,
here. We'll
anything
get a
else?
recording out. We'll try to email the recording to you. We'll also, if you want to save that link that I posted, the sales page link,
cool,
we'll post the recording to the webinar on that page later tonight. But we'll shoot all you guys an email when it comes time. But again, last time here, the link, it's www.tradingpub.com/TLP13. So again, TLP13. Doug Beal, you need to come down here. I'll take you to Al's Hot Dogs again. So Mark Tony's actually a White Sox fan. I'm a Cubs fan. Tough year. So. Good deal. Well, thanks again to everyone. Again, I'll post this link one more time. If you want to save it, we'll post the recording there. It's tradingpub.com/TLP13. Our next TradingPub event is actually going to be on Monday afternoon. So when we shut the room down, it'll take you to a page that allows you to sign up for that. Again, we'll have a great event again on Monday. But again, Tony's service, we'll post the link if you want to save this link, tradingpub.com/TLP13. I'm glad that you guys came, glad you enjoyed it, and appreciate you